If your entries feel random, this is what you're missing. It's not your strategy, it's your sequence. Most traders do this. They see a fair value gap or a structure break and they enter immediately. Sometimes it works, sometimes it doesn't. And that's why trading starts to feel inconsistent, because entries are not random, they are conditional. There are only 3 things that must align before you take an entry. If one is missing, the trade becomes low probability. Here's the exact model. Step number 1, stay aligned with the weekly candle context. Before I even look at the lower time frame chart, I ask one question. Is this weekly candle sweeping liquidity or continuing direction? You don't need complicated analysis. Just identify, are we near a weekly high? Are we near a weekly low? Has liquidity already been taken? The weekly candle gives direction. Step 2 is liquidity. No liquidity sweep equals no entry. If price hasn't taken stops, there's no fuel for expansion. You need to see price run above a high or below a low, then reject. That sweep is what shifts the odds. The sweep gives permission. Step number 3 is structure shift. This is where most traders rush. They see the sweep, but they enter before confirmation. Wait for the CISD. This clear internal shift, the break in structure, then retrace. That's execution. The weekly candle gives direction. The sweep gives permission. CISD gives execution. Let me show you exactly how this looks on the chart. Here we are on the charts, and I'm looking at a cryptocurrency token, but this strategy will work in any market. So the first thing you want to do is come onto the weekly chart, and you can see over here, if you look at this, each candle represents 1 week of data. So all we want to do is you want to mark the highs and lows. You see, we mark this high, it's been untapped, this low has been untapped, and then if we mark this high, you can see over here that we got a sweep. You can see we had a sweep happen on this candle over there. If we mark this low, hasn't been tapped yet. And now the one I want to show you is this one. You can see we got a nice sweep at that low. Once you can identify the rejection on the weekly candle, then you come onto your lower time frame. I like to enter on the 5-minute or the 15-minute time frame. So you can see over here, price is just broken below the weekly low. So this is the weekly low. So price breaks below the weekly low and we do nothing at this point. We just wait for price to come back into the range. So you can see price coming back into the range. And there you go. Now we get a nice strong candle coming back into the range. So this is now where we can look for an entry. I'm going to turn on the SMCX indicator because it just makes things super simple. And immediately you can see the CISD level is printed over here. And it shows you the actual higher time frame candles, showing you the sweep. This is the low of the previous week's candle, and price has swept that low, and now the rejection. You can see price has come back into the range of the previous week's low. This is what we want to look for. So let's play things on a little bit, and we get another sweep below the range again. So we want to wait for price to come back into the range. Then price comes back into the range and produces a CISD. This is where we want to enter. It's showing us a relevant structural level. So we can look for our long position. You always enter on the candle closure, and stop losses go below the swing lows. And then for relevant targets, I'm going to look for liquidity high points. That's one liquidity high, and this is potential other one over here. These two are going to be my targets, and my entry is going to be on the CISD. Stop loss is going to be below the lows. And let's play this out. All right, so price sweeps the lows again, and we get another CISD being created, but we already have a very good entry here. So let's play this out. Then price sweeps below the low again. We're still protected at this level, and it creates another CISD. So this gives you multiple entry points. So price has just exploded up to our first take profit and to our second take profit. But if we review this, you can see when price comes to these weekly lows, it grabs this liquidity and it gives it the fuel it needs to make the next move. So then all we want to see price do is come back into the range, break the CISD and close. And that is where we look for our entry. And then we're just always going to target the most relevant liquidity levels on the opposite side. These are going to be our draws on liquidity. So just imagine this is a weekly low. Price comes down to the weekly low, sweeps the weekly low out, comes back into the range. We want to see a break of the CISD, and that is where we look for an entry. Majority of the time when price breaks the CISD, that's a strong sign. It's going to continue high. Sometimes it does have a bit of a retracement. But once it breaks the CISD, this is where we're going to look for our entry. The break, stop loss comes below the lows. If this is in fact a true manipulation, price will not come further down below it. Price always moves opposite the direction of manipulation. We're looking for the most relevant liquidity highs as our targets. And notice something, the entry wasn't random, it wasn't emotional, it followed a sequence. Context, sweep, shift, execution. If your entries feel inconsistent, it's because one of those steps is missing. This is exactly why I built the SMCX indicator. It marks the weekly levels, it detects liquidity sweeps, and it highlights CISD automatically, so you don't guess the sequence. If you want to trade this model without overthinking, the link is below. Make sure to watch the next video now to master your entries. Click now to watch it.